listened to all three of these gentlemen. They are very smart, but they're also very good long-term investors. And what I've been doing over the last couple of weeks, and it hasn't felt good, I have been nibbling, and I've been trying to upgrade the quality in my portfolio. So I clearly agree with all three of these guys. I know we're going to get through this. It's just a matter of when. So I'm just trying to think 6, 8, 10 months down the road. I did get more aggressive this week, especially after Monday's Fed move. And the reason is because I think the unlimited QE was radical. It was necessary. It provided liquidity to the bond markets, and it also helped to stem the outflows. And I think that instilled confidence to the system. It's not perfect yet, but it will get better. And as we know, the bond market is an important part of the economic foundation. So you needed to get that right. And then we can now then talk about the fiscal side. But I'm a little bit more encouraged this week versus the past couple of weeks.
Mike Wilson there made a pretty positive case for why you should be getting long, and then ended it by saying it's the best risk reward he's seen for 2 years. And 2 years isn't a particularly long time frame when you consider quite the scale of pain that people have had to take to get us here.
Yeah, no, that's a fair point. I think it's difficult to necessarily say that all of a sudden this big drop of 30% in 4 weeks got the market down to some bedrock level of cheapness. I don't really think that's the argument here. I think what's happening is the losses came so quickly, and you've basically had several types of investors and traders who all at once could say, okay, this looks like an opportunity for a little bit of an upturn. It got way too oversold. If you're very technical, you say this is just a rubber band, it's going to spring back. If you're a longer term investor, you're getting to quarter end and you say, I'm in the business of rebalancing into stocks when they underperform bonds by 25 percentage points in 4 weeks. That's just the way the discipline works. And I think a lot of that is working together right now. None of these folks said, by the way, we hit the downtick to the absolute penny on Monday, and that was the low, and I'm going to defend that point. It was more that we're in the zone where it makes sense to add equity risk, because guess what? Risk comes out of equities when prices go down. It's something that's not intuitive, but it's the case.